Hey, everybody, it's Nicole Benjamin, your host here at Seeking Alpha, to bring to you another episode of the Weekly Grade, where we're bringing to you market insights in minutes. Now, for today's episode, I'm joined by none other than Stephen Cress himself, VP of Quantitative Strategy here at Seeking Alpha. He is the wonderful person behind a lot of the amazing products you see, our Alpha Picks portfolio, our Pro Quant portfolio, and our newest portfolio, the Quant and Income Growth portfolio. So, if any of those are of interest to you, we're going to talk a little bit about it at the end of the episode. But go ahead, take a look, and click the follow button on Steven's page. Now, Steven, thank you so much for joining us.
Of course. So happy to be here.
Absolutely. Now, I want to jump in. On this page, we're looking at bank earnings for the season. And you've highlighted that there are several massive tailwinds that are happening in this crowded tech, sector. So, as, a major bank, their Q2 earnings are kicking off. What are the financial stocks quietly emerging on the market's new leading sector?
Yeah. New leading sector is a good way to phrase it. Technology had been the best performing sector year to date, but we've run into, as you said, really headwinds. There's been a lot of risk on, risk off, risk on, risk off during the month of June. And we're sort of now in a position where a lot of the technology stocks are selling off, not really due to the fundamentals of the company. There's a lot of anxiety and fear that these tech stocks are overvalued, and investors have been moving to safe haven sectors and asset classes. But as they're doing that, they have noticed that many of these financial stocks, which were fairly poor performers during the course of 2024 and 2025, are actually coming through with fairly solid earnings now and have very attractive valuation frameworks. And one of the reasons, believe it or not, it's one of the few sectors that can benefit when interest rates go up. Reason being, banks like Citizens make loans. Citizens is a very strong regional bank in the metropolitan area, and economic activity is very strong in the metropolitan area. So they have the ability to provide loans at higher interest rates, and they're hitting that sweet spot where they don't necessarily have to move up what they pay depositors that fast. So it actually improves their margins, and that comes through to the bottom line. So that's why a lot of stocks like Citizens are doing quite well now. And yeah, as technology runs into headwinds and investors are looking for new sectors and asset classes, the financials are coming up strong with the combination of good growth and good valuation frameworks.
All right. Now, I did want to ask, you've given Citizens Financial Group a top, strong buy rating. So,
Mhm.
with that in mind, and what you've just previously touched on, what makes this specific regional bank stand out in comparison to its competitors?
We rank all our stocks in our universe through the quant system. And with this particular company, we actually break it down to sectors. It ranks 38 out of 692 financial institutions. But within the regional banks, it actually ranks 7 out of 240. So it ranks really high. And what I like are the factor grades. So if you look at the right hand side, you'll see all those factor grades, which are like academic report cards. For valuation, it's a B, which means that valuation is attractive. And these are on a sector relative basis. So when you see that B for valuation, it gives you an instant characterization of what the valuation looks like versus the sector. When you look at the A for growth, you know the growth is far superior than the sector. When you look at B for profitability, you know they're more profitable than the rest of the sector. And the momentum of the stock is definitely showing that it's better than the sector, as well as revisions. And revisions are sort of a proprietary metric we use at Seeking Alpha. We actually measure the quantity of analysts that are increasing their estimates or decreasing their estimates. And not only do they have a B grade, which shows that they're increasing their estimates relative to the sector. If you look at it where it was 6 months ago, they're actually increasing it at a faster pace because 6 months ago that revision grade was a C plus, and now it's a B. So they even have more conviction now. So these are some of the telltale signs that we like. And the fact that I see green across the board shows me that it's a very good report card. In addition to that, if you were to click, if you were on our premium site and you clicked on growth for the company, you would see that the EPS forward long term growth rate for the stock is 23%. And that's according to consensus from analysts. So we're using a consensus number, which shows up 23% versus the sector, which is up only 11% for long term growth. In regards to the ROE growth for the company, its ROE is growing at 18% versus the sector at 3%. They also pay a dividend and they have a dividend safety grade of A minus, which is very strong. So there are a lot of different features for liking this company, and not for anything else. They've had 11 consecutive years of dividend payments, and they've also had 7 consecutive EPS and revenue beats as well, meaning every time they report their earnings, they beat analyst estimates, which is a really nice, aspect of the company.
All right. Now, before we wrap up here, Steve, I want to talk about the products that we have on our site here, our Alpha Pix portfolio, our Crow Quant portfolio, and our newest Quant Growth and Income portfolio. All of these are heavily beating the S&P 500 and their ETF benchmarks. So with that in mind, what are these portfolios doing that allows them to capture these high yields and the upside while still protecting investors from that market volatility?
Yeah, so, each of these portfolios, although they're, a little bit different, there are some common threads between them. Um, Alpha Picks, is a portfolio service where we provide investment research ideas, and, like, for many individuals, they don't wanna just read articles on occasion or look at our top 10 stocks in January. They wanna invest more consistently, so we have a product like Alpha Picks, and Alpha Picks is designed for long-term capital appreciation but not with that much of a lift. Twice a month, we send out our favorite quant strong buys. We do it on the trading date closest to the first of the month and the 15th of the month. We write an article. We also publish it on a platform. It's very transparent. And you can see what the weight is in the portfolio, what the rating is, what the price is. So it makes it really easy for you to follow. So Alpha Picks, pretty much a low maintenance type of service. You just have to look at it twice a month for those favorite ideas. Now, I will say we actually did a survey of the Alpha Pix customers, and one of the things that they wanted, about 50% of them actually wanted a higher frequency of ideas. So we developed a Pro Quant portfolio, and you could see that just came out a little over a year ago, and it's doing quite well for the period that it's out. It's up for almost 50% versus the S&P up about 24.5% for the same period. That's a little over a year. Alpha Picks, which they go to the left, you can see there they have a whopping return of 355% versus the S&P up 98% for the same period. And then on the far right, you have the quant growth and income. That also was born out of a survey for the Alpha Picks customers, where half wanted a higher frequency of trading ideas, the other half actually wanted dividend stocks. So this sort of fulfilled that need. There's a portfolio of 30 stocks. All of them pay dividends, and that rebalances once every 2 weeks on a Wednesday. And on average, on those Wednesdays, we typically have 2 to 3 new recommendations coming out. So it really covers the gamut for long term capital appreciation with a high frequency of ideas, a moderate frequency of ideas. And then for individuals that like capital appreciation and income, we have the quant growth and income. And you can see that is done incredibly well. We just launched that in June, and it's already up 9.3% versus its benchmark, which is the Vanguard High Yield ETF. That's barely up, not even a percent, just a little over a half a percent. So that's actually doing quite well, as the other products are too.
All right. Well, I think that wraps things up here, Steve. Thank you so much for joining us. And for everybody that is listening in, go ahead, take a look at Alpha Pix, take a look at the Pro Quant portfolio, and also take a look at our newest Quant Growth and Income portfolio and see if any of those might be right for you. And of course, always click the follow button on Steve's page. He's got a lot of amazing content on there. Read his latest article, and we'll catch you next time. Now, just for some housekeeping, past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by an institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Thank you so much.